How's it going, fellow traders? Magic Trader here, and this is the CFTC report for the data reported on January 21st, 2020. Here is a snapshot of the positions that were held by the institutions as of that date. And so let's start by taking a look at gold. What do we have here with gold? Well, we have price hitting supply, and while price was consolidating after a very big rally and a retracement, we have price consolidating, and we see that longs have been closed off from 383,000 down to 376 and now down to 374. So in between these two candles, they didn't do much. The big decrease in longs came with the big spike upwards. We take a look at shorts, so not doing much with that. Long exposure still sits at 87%, and we have just a slight decline in net position. So still very long, still very bullish. This is going to be like this for quite some time. What we are expecting is a push towards this trend line here, where they will trigger retail traders to buy long, and that's where they will likely get rid of all their long positions and start to accumulate a short position. So that is what the market dynamics is suggesting is going to happen. And with the positions so overly crowded to the long side, it's what's likely going to happen. So we're still watching for that to see how this plays out. We got oil here, and we see that longs have been declining, and for good reason. This big decline, 610 to 599, came as price was consolidating before the push lower. So they were closing off long positions as price was dropping, and again, this was all triggered by this rally here caused by the Middle Eastern event with the missile strikes, luring retail traders into buying because that's what the news was saying they should be doing, and boom, they drop it. So not really of any surprise here. Back down to demand, where it will likely either rally up or continue lower and break. Bottom line is we're watching these two zones to see what gets taken out first. Alright, now we go over to the US dollar. We see that they've been cooled off on longs for quite some time, and they increased shorts but still cooled off. We see sentiment is cooled off as well. But the bottom line is price is reacting to the upside. Why? Because we have demand in play, so likely going to continue on with that trajectory. But you do see that we have supply here, so expecting some kind of a reaction from that area. But we're looking at positions. We don't see anything in terms of what they are likely going to do. So we move on to the Aussie, and we see more profits being taken on short positions. So short positions, profit taking. Now we're declining from supply, and again, profit taking on short positions. Not doing anything with long. They're still focusing on profit taking with their short positions. We take a look here. The sentiment somewhat bearish, not overly extreme, but somewhat, and same thing with net positions. So still focused on profit taking. They're not accumulating positions, so we got to be very careful if we're going to trade this pair. USDCAD, look at that big drop in longs. They used to be 52K, now it's 26, cooled off. That came as price was right here. And you take a look at short positions, increasing. You would think that price is going to head lower, and you know what? The charts are suggesting that that is possible, but we're also seeing very strong signs that this is what's going to take place. So interesting to see how it plays out. I want to know why, if price does eventually go higher, why they would be doing this. It could be because you see big drop here. It took longs to do that. As price starts rallying, there are still or shorts I should say, as price was rallying, they were still adding their shorts, but now with this big spike up, probably closing off those shorts. So it is early to tell. It is early to look at this and know exactly what they're doing, but it's likely that this big increase in shorts was for this big move, and then they're taking profits as price bounces up. Next we have the US dollar Swiss franc. And what we can see is that over the last few weeks they've been very cooled off with their long positions, and shorts just slightly aggressive. But then again, we just finished dropping, so it would make complete sense that that's the case. If you take a look at net positions, they're turning into bearish, but that could just be, on the brink, and then we could see a rally. So it's hard to say. If you look at the monthly chart, there's still room for price to decline. So looking at the positions, slightly bearish. That could mean that they're going to continue price lower, but we don't know that for sure. If you look at positions here, there's nothing solid here. Okay. Now we go to the euro US dollar. What do we see? So price as price was declining towards the trend line, we saw an increase in longs and a slight increase in shorts. Not much to see. 56% to the short side, a small decline in the positions, bearish. So nothing's really changed. They're still bearish all throughout this. They've been still bearish. So does that mean a bigger drop? Possible. We detailed what we think is going to take place in the latest EURUSD report and the reasons why, and we're watching for very key things to take place to solidify that argument. Alright, so now we go to the pound. What do we see with the pound? They close some longs and they increase some shorts. Shorts are cooled off, longs are aggressive, bullish sentiment. We are in net positive territory. And but then again, we just finished rallying. So we got Brexit, the end date on Thursday. So how is the markets going to react? Is it going to be bullish? Is it going to be bearish? It's hard to say. There is a slight bias to the upside simply because we got demand in play. But with the US dollar acting the way that it is, it's possible that we see a breakdown like this. So I'm not trading this pair until after Brexit, and then we'll see what the market wants to say about it. US dollar, Japanese yen, increasing longs into aggressive territory. But that was causing price to come into here. And slight increase in shorts, total size becoming a little bit more aggressive. We take a look at the sentiment, it's still neutral. Net positions is positive. Do we head higher? Probably we see a little bit more of a reaction, and then eventually we'll break up, but it's hard to tell at this time. Alright, last but not least, we have the Kiwi dollar. And the Kiwi dollars got, they were aggressive with 27,000. They dropped it by 3,000 and change. And January 21st, not much happening here. They closed off some shorts right here. So they were bearish, now neutral. They just turned bullish with their net positions, but sentiment is still neutral. Not a good time to trade it. No trends. This can continue lower, or it could hold and continue higher. So we're waiting to see, because we got two zones here. We really don't want to try to predict which zone is going to play out. So it's best to just wait for one of them to get removed, and then we'll take trades. Okay, that is your CFTC report for January 21st, 2020. If you need to learn more about how we do this analysis and how we find our zones and all that good stuff, you can go to www.whiteoakfx.com. Thanks. Have a good week.